Howdy, folks. That's right, it's Easter. Happy Easter, everyone. Obviously, a fantastic day. Historically, we love Easter, okay? We're going to talk about stocks to buy for April. A little bit late on the trend, don't worry. Just a couple days late, but you know what? It takes a little bit to compile some of these sometimes because you got to find some good deals. And I don't want to repeat the same stocks every single month, but we tried to include some different ones. Three total stocks here for you today. I hope you enjoyed. Let me know in the comments what you are buying and what your opinions of these ones are. Obviously, I wanted to include some more. I think there are some more that I like, but these are the ones I chose this month. First off, you're going to see it right here on your screen, and Mr. Apple, baby. You know that. You know Apple. Um, Obviously, really the biggest technology company in the world. Apple is one of the most diverse companies ever as far as what they're able to do. You look over the last year, the stocks had some very favorable moments. Obviously, we had a stock split and the stock rising 89%, no joke. But you have seen some stagnancy since September of last year where it's actually gone down. Not much positive reaction since then. But still, over the last 5 years, massive growth on this company, as you can see in terms of the stock price. So let's look at some of the data. First, you look at what Apple is. Fantastic, just home to their webpage here. They include every single bit of this business. Obviously, right now they're primarily focusing here on top of this Apple Arcade. Obviously, for phones, it includes mobile games on it. So, again, subscription-based services, they are the way right now. It is the future. It is the future, frankly, of the industry. It is the hotness, or it's the current hotness, subscription-based services, because it's recurring revenue. So, obviously, Apple Arcade, massive, because it unlocks a wide variety of games that people can play on demand. Pretty nice. They mentioned, obviously, the most recent iPhone 12, which, frankly, this is a super cycle. Let me tell you, iPhone 12 performing very well on the year. Fantastic numbers from iPhone 12. On the right here, you have iPad. Obviously, iPad, fantastic stuff. iPad has been performing well this year even, too. People are buying a lot of stuff. We have the best-selling wearable in Apple Watch. Just historically, they're the best selling in terms of wearables, and wearables are becoming a very common trend. People are always having an Apple Watch. We have Apple One on your right hand side here. Bundle up to 6 Apple services. So it's a bundle where you get access to different apps, obviously for a lower price if you put them all together. Pretty nice. You've got the Apple Card. Why not? Why not the Apple Card? It's good to have, Marissa Robertson. Don't know her. But it's good to have, obviously, they've got skin in the game everywhere. I mean, you can tell that even in finance. Here they are. And obviously on the bottom right here, Apple TV Plus. You would expect they probably promote this a little bit more, obviously because streaming is massive, and really of the utmost importance right now. But Apple TV Plus, not doing necessarily gangbusters, but obviously here they have a DreamWorks film in the make, so that's pretty exciting. So take a look at that. Obviously, pretty exciting stuff. Apple TV Plus, baby. You look obviously at the revenue history of this company, which I think it's always worth mentioning. It's incredible. I mean, there are few times you'll see a revenue chart better than this. I mean, you see consistent growth throughout this entire period here. I mean, you rarely see any time that you see anything down besides 2017, a little smidge of down, okay? Or 2016, I should say. Just a little smidge. Mostly, if you look at the very bottom, quarterly increases, green grass, baby. It's all green. And you do see, obviously, diminishing percentage increases. And that's just obviously the law of large numbers there. As your revenue number increases, it's going to take a lot more in terms of billions of dollars to increase by the same percentage amount there. So increasing by $1 billion when you're making $10 billion is a lot different from increasing by $1 billion when you're making $100 billion in terms of percentage. So you need to keep that into consideration. But still, revenue is growing significantly. This last quarter, obviously, they posted a 21% increase for Q4, which is massive stuff. Massive stuff. And obviously, I saved the goodies for towards the end here. That's right. Once it loads, don't be janky on me. It is the Apple Car, baby. Worth mentioning because this could increase certainly shareholder value in the future when this becomes a reality, and obviously if it does. But I'm assuming it will. Apple just truly has skin in the game everywhere, as I mentioned, and that's why I think the stock is worth picking up. We'll look at valuation in a second, but Apple Car obviously projected slate for 2024. We'll see what that looks like. We look at valuation of the company trading at a 2.6 or 2.06 trillion dollar market cap. Obviously seems like a lot, but you need to put into consideration the company brought in the last year, in the trailing 12 months, nearly $300 billion. Nearly $300 billion. Don't worry, a little stuffy. The allergies are getting to me, man. What's going on out here? So, all things considered, $300 billion for a company growing at still good rates, trading at a 2.0. It's not that incredibly overpriced. I mean, we're talking about really only right around 7 times the valuation there. It's not that crazy. I mean, all things considered. Trailing PE a little bit higher, but actually cheaper than it has been in history, in recent history, I should say. 33 trailing PE, and a forward PE under 30 for a company with this level of growth and size is freaking cheap, in my opinion. 28 forward PE, really cheap in terms of what this stock is right now, in my opinion at least. So, and compared to the broader market, it's pretty cheap. So that's what I got for you for Apple. Hope you enjoyed that. We've got after them, what a shocker. I mean, I talk about it a lot. Haven't included on here for a little bit. It's Disney. Disney, Walt Disney Corporation. There's a lot of reasons why I like this on the list right now. We look in the past year, it's been relatively favorable to this stock, up 89%, just like Apple was, for sure. And a lot of it, frankly, the focus is because of their main thing. It's going to be Disney Plus. I mean, you look at their website, big thing. They're pushing Disney Plus on their website just from the homepage. I mean, it's everywhere. This is incredible. And obviously, what's pretty exciting is, I mean, look at this. They're pushing all of it. Streaming now on Disney Plus. But you see some bangers right here. I mean, Raya and the Last Dragon supposedly was a pretty big banger. Excited for that. We've got coming soon. Really excited about, obviously, the new Star Wars. You got Loki. You got these shows that are they're increasing original content spending by incredible amounts this year. And Disney Plus already is doing gangbusters. If you look, they just passed the $100 million subscriber mark. And remember, that was their goal for 2024. That was their 2024 goal, was 100 million subscribers. And they've hit it now in the first quarter of 2021. Obviously, they boosted that down to 240 for the 2024 goal, but I mean, that's incredible. 100 million subscribers after a year and a couple months of being out is incredible. Obviously, they're going to keep building that subscriber base and keeping them consistently subscribed. Recently, there was a report that came out that there's a lot more subscriber loyalty on Disney Plus than even Netflix, because Netflix doesn't keep the originals flowing quite like Disney Plus is planned to this year. We're talking about a lot of originals, and they are the king of content. I mean, there's no doubt about it. They have series and brands that no one else has, from Marvel, obviously, to the Disney brand. It's incredible. Star Wars, they've got it all. They've got all the major brands you wouldn't think about. So, really crazy what they're able to do. And they're going to continue it with Disney Plus. That's why I like this stock so much. But on top of that, it's not just Disney Plus for this company. What I like is, what has been historically the biggest segment of Disney? Well, frankly, it's been the parks and travel. And you know what? Parks and Experiences has been completely shut down this year because of the coronavirus. That's right. So I went, and this is pretty cool if you haven't done it, but there's um, uh, a vaccine tracker that'll show you historically how the vaccine's progressing here. It's pretty exciting because it gives you data you could check by every single country, and obviously the United States pretty well towards the top here. Certainly in terms of vaccines distributed, not a shocker because obviously the vaccines were produced here, tested here, so we obviously have the majority of them. But you look in the United States right now, which is where you're going with Disney Vacations. 31% of the population right now has been vaccinated. That was obviously data as of yesterday, so probably closer to 32 today, but pretty exciting. And you compare that to some of the others. I mean, Canada, 14%. We sold them a good batch, but there's a lot less people in Canada, so you think about that in terms of numbers of doses distributed. Europe, only 13%. And again, a lot of that's because that's an entire encompassing Europe, so some countries in Europe have a lot more probably. India, one of the most, obviously the most populous country in the world, 4.7%. And all of Asia, obviously only 2.3. Not too shocked there in that distribution amount. So crazy to see these numbers though, but obviously you see people are getting vaccinated, and that means the parks are going to be reopening and people are going to be allowed to go in once they've obviously shown proof of vaccination. And I wanted to point out just how much that means to this business. So if you look at the most recent annual results, I'll highlight the numbers you need to know. Obviously, Media Network's incredible. But here's the numbers you want to see. September of 2019, that was the year-end numbers here. You want to look at Parks, Experience, and Products. $26 billion went through Parks and Experience in 2019. And then you look at last year, only $16 billion because of everything being shut down. And that included a good fourth quarter. So really over the last trailing 12 months, probably pretty negative. So obviously you're going to expect an increase of that, but when this thing's full-fledged and running, we're going to expect more than $26 billion because once everyone gets back, they're going to be booking the heck out of vacations here. So this line is going to be easily over $30 billion by really the end of next year for sure. And on top of that, you look at the direct-to-consumer line, which is Disney Plus. They put up $17 billion last year. That compares to only $9 billion the year prior. So that's an incredibly fast-growing business there. 81% increase year over year. It's going to continue to increase because subscribers are growing at just as fast a rate. So they're going to have two massive segments, obviously. It is crazy that the direct-to-consumer right now has taken over the Parks and Experiences, but again, it won't come by the end of this year. Most likely, we'll see. It'll be darn close, so we'll see what those numbers look like. So that's why I'm huge into Disney. We look at the valuation on this company. Obviously, P ratio, not that cheap. You look at the market cap of $336 billion. I'm not too offended by that, frankly, because you look over the full year, where you saw $65 billion in total revenue. Market cap of $330 billion is not incredibly overexpensive for this company and what they're able to do. Because you think about the future of this company and where streaming takes into place, it's an entirely new segment on top of what they were already doing and increasing. It's an entirely new segment that is growing at massive rates. So it's just an extra free source of revenue that's going to increase their revenue by at least 30% a year compared to what they were doing. Probably more than that. And obviously streaming makes you trade at a premium. Let's be fair. You look at the rivals and their streaming success, what it makes their valuation trade at, like a Netflix, very high valuation. So again, not crazy. Trailing P of 51, obviously because profitability's been wiped out because of the Parks and Recreation segment, Parks and Experience. A lot of expenses still went into there, obviously with wages, and obviously keeping the parks open, but not a lot of revenue came from it, so profit was a minimal. Forward P ratio, obviously 149 I don't find that quite accurate because once parks and experiences reopen, you're going to be looking a lot better in that aspect. So consider that. My last stock today is NIO. That's right. I had to include NIO on here because, of course, I did. I was thinking about Ford and NIO both because I like both of them, but I just wanted to keep it to three. Two automobile companies might be a little too egregious for you guys. So, NIO, there's no doubt over the last year I've enjoyed a nice ride on this stock. I mean, we're talking about increases of 1,500%. By even more than that prior. I mean, this thing was up over 2,500 prior. So the company's doing some great stuff here. You look at the homepage, obviously NIO is an electric car maker. They've got great stuff. They're obviously the ET7, a vehicle in which they are working on producing. They have the EC6, their flagship ES6, the ES8 as well. But obviously the ES6 is the biggest model. EC6 doing some gangbusters numbers here, and the ET7, once it comes out, it'll be do some pretty good numbers, frankly, in what they're able to do. Pretty exciting stuff. So EC6 doing good numbers. But you look at this company, obviously, and they just provided their delivery updates for the first quarter, and it's incredible numbers here. They're incredible numbers. They increased 370% year over year in terms of March deliveries and 423% in the first quarter deliveries increasing. There were obviously questions concerning if this company would be growing. No doubt people were concerned if this company was going to take off and people were going to buy the vehicles. But there's no doubt when you see 400% increases here, it's quite significant. 20,000 vehicles, cumulative deliveries will reach over 100,000 by next month. So with those numbers, I think there's no doubt saying that this company, which is only operating in China right now, is doing great things. And my future really analysis for this company is that there will be global expansion. Obviously, they have a headquarters in the United States, which they've had for a while. But if they could expand here, some of these models are pretty good looking. And they're pretty nice vehicles. They have headquarters in Germany. We'll see what that looks like. So I think there will be global expansion here within the next couple of years. And when they announce that, this stock probably goes bonkers, by the way. Obviously, it's fair to look at valuation. Trading a market cap of $61 billion. You do need to consider this probably is going to be overall a year in which they bring in, I would say, right around $5 to $6 billion most likely. Probably closer to 6. Maybe even a little higher. So again, that's around 10 times the multiple. It's not incredibly expensive, frankly, for a company growing at the status that it is. I mean, we're talking about 300% increases in vehicle deliveries is quite incredible. And if you look at the revenue trend, I mean, there's no doubt you can see the early stages of a blooming business. Blooming. Just blooming. 150% increases, 139% increases. Early, obviously, first quarter of 2020, not looking good because of, well, everything shut down. But still, there's some good numbers here. Incredible numbers, frankly. I don't know. That's what I'm looking at for NIO, and I think this thing in the future is going to be worth a lot more than what it is. You need to take a look at it if you haven't. Obviously, not everyone got in at $2 quite like me. But I hope you have a good day and have a great one.